My dad works in B2B marketing. He came by my school for career day and said he was a big ROAS man. Then he told everyone how much he loved calculating his return on ad spend. My friends still laugh at me to this day.
Not everyone gets B2B, but with LinkedIn, you'll be able to reach people who do. Get a $100 credit on your next ad campaign. Go to linkedin.com/results to claim your credit. That's linkedin.com/results. Terms and conditions apply. LinkedIn, the place to be, to be.
This episode is brought to you by Progressive Insurance. Fiscally responsible, financial geniuses, monetary magicians. These are things people say about drivers who switch their car insurance to Progressive and save hundreds. Visit Progressive.com to see if you could save. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary, not available in all states or situations.
Hey guys, welcome back to the Trading Coach Podcast. Your host as always, Akil Stokes. Thank you for joining. Today, I want to talk about a different and quite possibly weird way of looking at the market that may help you to see things clearer. Now, before we hop in, a little shameless promotion here. If you're interested in learning how to trade, make sure you check out the website www.tier1trading.com. That's where we have our community, our supportive resources, and of course our courses. Start with the 14-day risk-free trial membership. That way you get a feel for what's happening on the platform before making any type of commitment. www.tier1trading.com. I don't nearly plug my service enough, but trying to do a better job at doing that. But before we hop into the podcast, which is actually recorded from one of our live sessions on the platform, I want to share with you something that one of my trading mentors told me very early on in my career that actually stuck. And I say actually stuck because, like many of you, I was kind of reckless and impatient when I first started my trading career. And my mentors told me a lot of stuff, and I did a lot of yeah, and then doing the opposite of it until I reached enough financial pain to be like, hey, I should probably listen to these guys who I'm paying lots of money to teach me. And lo and behold, when I started doing that, I started becoming a more successful trader. But one of the few things that stuck with me from the very beginning as I was learning about technical analysis, because I come from a fundamental background, not a traditional fundamental background, like I didn't, do great in micro and macroeconomics in school, but I was a stock investor who mainly used fundamental / I called it common sense investment approaches to make my money, baby, right? I'm doing a dance. You can't see me just audio today, but I'm doing a dance in the background. And the thing that one of my mentors told me was, he said, Akil, I'm looking at, because I was struggling with candlesticks and I didn't understand why they were happening and what they meant. Like, why are these things on my screen? Like, where's just the line? And they were like, Akil, the candlesticks are nothing more than a visual representation of all of the market's participants and the decisions that they have made. And we say have in the past because a candle doesn't print until an action has been taken. And that's something that really hit home with me because, again, I told you I had a very, I call it common sense investment approach when it came to the stock market. And I didn't read a lot of reports and do a lot of digging into the data like that. I used common sense. I had a feel for what the market / the people valued. I had a good feel of getting ahead of things and getting invested in certain companies before kind of the mass knew about it. And the understanding that, hey, people value this, but the bulk of people don't understand that this is valued yet. Once this comes to the light that this is valued for whatever reasons it may be, this is going to take off. And I did that over and over and over again to extract money from the market. And so when the candlesticks were put in that same perspective, I started looking at technical analysis in an entirely different way. I stopped just trying to memorize candlestick formations and different patterns and know what they were, but didn't really know what they meant. I started really understanding what each move in the market actually meant. And in doing so, it just gave me that little bit of an edge and that ability to, again, get involved in something before the masses did. So it is something that I preach now. I have a training course that I created in this weird way of thinking. We talk about candlestick psychology and all this fun stuff. And I was a little bit timid about creating it. I actually held off for 2 years because I thought people would think I'm crazy. And I said, you know what? I don't care if people think I'm crazy. It works for me. I've been profitable doing it. Let me share it. And it's been one of the most popular courses on our platform. So I say all that just so you know that I am not crazy. I just have a different way of looking at the markets. But like we always say, the best traders are creative. The best traders are a little bit unique. The best traders are looking at things or looking for things that most others aren't. And that's what separates them from what most others are achieving. So I'm not saying that you need to look at things like this or even think about the market like this, but entertain the thought, give it a try, and see if it helps your trading in any way. So the question is, but is that volume not in the past? How do we know volume will be there in the future? Let me ask you this question. Raise your hand or type in a yes if you think structure is important. Raise your hand or type in a yes if you think like a candlestick pattern is important. Or a candlestick, not a pattern, but like a candlestick. Are those things in the past or the future? Here's the secret about trading and life. We won't go down that hole. Everything's in the past. Everything is in the past. So asking about volume and volume, I look at volume as being synonymous with structure. Asking about volume and saying, how do we know it's important? Because it is in the past. It's the same way as looking at structure. How do we know that this level of structure is important? Because this level of structure was in the past. How do we know that this level of structure is important? Because this level of structure is in the past. How do we know that this level of structure is important? Because this level of structure is in the past. And the truth is, we never know if structure is going to be important or unimportant again. But all we can do is make the best prediction. So the same way I can look at a previous structure high and say, man, the market pinged out this level 3 times before. My prediction is that it's probably going to pay attention to it again. That's the same exact way you would use the volume. The volume is showing us levels that were important in the past. And as traders, our typical belief is that levels that were important in the past are probably going to serve some importance in the future. It doesn't mean they're going to hold, doesn't mean they're going to reverse. The market can blow right through. But that's the best prediction that we can make. Does that make sense? So everything is technically in the past. But the past is the best clue we have to predict the future. In all aspects of life, right? in all aspects of life, right? You look at a sporting event, right? Everton beat Spurs this week. Maybe that's a bad example because Spurs is pretty crappy too, but Everton's even worse. Fully went in thinking Everton was going to lose. Why? Because we haven't scored a goal in like 8 months. They went on and won. So everything we do, we make predictions. Do why do we when we go to our car, for you guys that, you know, whether you push the button or turn the key, why do we think the car is going to turn on? Because it's turned on in the past, right? When we put our key through the door to get inside our house, why do we think the door is going to open? Because we've done it in the past. When we wait for public transportation and we sit at the train station at 9 o'clock, why do we expect the train to be there? Because it's done so in the past. So again, saying earlier, I didn't want to make it big and philosophical, but everything in life is based off of past things that we expect to be true in the present. And it's not always the case. Buses have been late, trains have been late, cars have not started, doors have not opened. But it's the best predictor that we have. But isn't volume market participants? Will the same participants be there in the same level, or am I not seeing this correct way? So yes, so volume represents market participants, but so does everything else in your chart. So structure represents volume participants as well. An individual candlestick represents market participants as well. Everything on your chart that moves is a visual representation of the market's participants. So the current candle that's forming right now, market participants. The higher high, higher close somewhere on your chart, market participants. Structure, market participants. Yeah, everything is market participants. So again, it's going back to, it's all crowd psychology and human behavior, right? If a train is supposed to come, if a train comes every day at 9:30, there's probably a group of train riders that wait at the station at 9:30. Would you guys agree? Train comes Monday, 9:30, people are waiting at 9:30. Train comes Tuesday at 9:30, people are waiting at 9:30. Wednesday, what time do you think people are waiting at the station to catch the train? If you had to make a prediction, you'd probably say 9:30, right? Yeah. It's the same thing in the market. We're using that past information. Does it mean that they will be there? No. Could there be more people? Yes. Could there be less people? Yes. Like, you never know what's going on in life, right? It could be snowing outside and half the people aren't going to work. Could be a holiday, right? So there's different elements that get in the way, right? There could be a news event that causes this to smash right through structure. It could be a low volatility day and market never gets to that structure level. It could be, a million different things. So again, like, I want to keep putting emphasis on, like, we never know for sure. So that's why there's no such thing as a 100% trader, but it's the best predictor that we have. Yep. So I would think of volume. Volume is the same way as structure, same way as candlesticks, right? It is just a alternative way of viewing market participants. And specifically in Forex, you're not worried about the actual volume number because that's not a real thing, but you can look at the level of interest the same way. Let me know if that makes sense, or I'm running out of analogies. So people were waiting for a camel at 9:30, and yeah. So yes, psychology. I've recently been thinking about this: how I can understand market participant psychology to create a strategy to filter appropriate indicators. Think about it the same way we teach you how to read candlesticks, right? If you can properly read a candlestick, someone said this earlier about the wick of the candlestick. That's reading the market. That's reading market behavior. Hope you enjoyed this show. Like I said before, if you want to learn more, www.tier1trading.com is the place to be. Myself and Jason Greystone are the coaches over there, along with a wonderful community of traders, both new and experienced. They are the real gem of the platform. We have software, we have educational resources, we have training courses, but what makes our platform different than a lot of other places out there is the community of like-minded individuals that want to see and are willingly helping you in your journey. So www.tier1trading.com. Check it out. Start with the 14-day risk-free trial membership. No sneaky auto bill or anything like that. And I'll see you guys on the platform.